Hello, everybody. Welcome to Coffee for Closers. Alex Wellings here, but today I am joined with a special guest. We don't typically, we typically have Mr. Rick Kohlmeyer on the show, but today we've got somebody that specializes in the federal space. Maybe a new advisor to Megastar, but no stranger to the federal world. Somebody that's made the life insurance sale and beyond, but primarily focusing on the life insurance part of the sale and then using it as a linchpin to having other conversations here on the show to talk a little bit about, obviously, his process, but his experience and his advice for you guys. I've got Mr. Tim Nolan here, head of, what is the agency's official name, actually?
Gateway Insurance Partners.
Gateway Insurance Partners. Probably the fastest growing firm that we have here at Megastar. Obviously, you've been new to our appointment program, but you've been working with federal employees for how long?
Number 5 years or so.
5 years.
Federal.
Yep. So 5 years in the federal space. But in the life insurance world, how long?
20 years. Going to actually be 21 years come tomorrow, March.
Okay. Wow. Jeez. All right. Well, that's a lot more experience.
I'm showing my age a little bit.
Yeah, a lot more experience than I have. But so today we're going to talk a little bit. We've talked obviously this morning and over the past few months about your specific process. We've obviously, maybe you've seen on the show, we've talked a lot about the life insurance sale, the need for more people to approach it, where there's all kinds of money to be made there, but also a lot of help for federal employees out there that might not maybe understand their life insurance scenario. I've found it to be the linchpin to a deeper discussion about everything else, whether they need the life insurance or not. Starting there seems to, or using that as the kind of the first piece of good, genuine advice to give a federal employee seems to be the real key to having success in our program. I was interested to hear your process this morning. I want to talk about that a little bit today, but let's start maybe at first talking about your experience in the program. How has it been over the last, you've been with us maybe just under a year, just about a year at this point?
Yep.
So over the last year, how have you found these appointments to work? And then maybe we'll jump into some of maybe we'll flip it. We'll talk about your life process, and then we'll talk about maybe advice for guys and gals out there.
Yeah, no, it's been a great process. Really jumping into the federal space with you guys. It's really opened our eyes to other opportunities, coming from the life side and selling the annuities and such in the past. But the federal space really gives you a lot of opportunity. Yeah. And identifying that opportunity through life conversation, you're opening up all other doors.
Right.
And it's been a great process with Megastar and with the opportunities here in federal space.
So before we got going, you talked to us a little bit about your process is pretty similar to what we've talked about. You start with the pension, right? You start to move towards the life insurance sale or life insurance conversation.
Sure.
And then start to talk about outside assets. Social Security was another one. We don't typically talk about Social Security, but that's a great point that you are. So let's walk through that together. You've had a tremendous amount of success doing this, so I want to be all ears here. Let's just lay the foundational aspects. We'll have other videos that we'll do to talk a little bit and maybe to illustrate a little better what you're talking about. But walk us through your process from the first time you get this appointment all the way through. We'll try and make it towards when you're writing business. Okay.
Sure.
So when you first get an email from Jeff or from our internals here at Megastar, what happens first and foremost?
Yeah. So we have a great back office staff that helps us with the appointment setting process. So confirming that appointment is key. We do a 3-step process. We do an email, we do a phone call, and we do a text message. Okay. Really just
text
to make
message.
Sure.
That's the number one thing for us, right? We love the text message first, but okay. So phone call, email, or is it email, phone call, text message?
Yeah.
Okay.
Yeah. It really helps solidify them to understand that we're not just a fly-by-night company and that we're here to help them.
Okay.
And really we find that after we actually get that appointment, we have the first appointment, they understand that we're in it for them, not us.
Okay.
Which I think is key. Building a level of trust has been part of the way that we've grown our business.
Right.
Is we really build that foundation with them first to make sure that we're not just selling them something.
What does it say in the confirmation call or email or text message? Like what's the verbiage there? Just
sure. It's, we talked that we're with FEBA.
Okay.
and that we're their federal retirement consultant
Sure.
to help them understand all of their federal benefits.
Are you going into who you are as a financial planner at all in that, or is it just primarily saying, "Hey, I'm your federal retirement consultant"?
We just mainly keep it basic.
Yeah.
Federal retirement consultant to make sure that we're not calling out products. We don't want to say that we're a life insurance salesperson.
Mm-hmm.
We don't want to say we're a, we're talking about managing money, or we're a FIA, financial investment advisor.
Yeah. Yeah.
We're just a consultant.
Yeah.
We're here to help them understand all their different ins and outs.
That's
of
all
their
you are at
benefits.
that point, right? It's like you're not any more than a benefit consultant. You don't know that there's an issue that would potentially need financial planning help.
Right. Exactly.
So you start there, they confirm. What's your first appointment look like?
First appointment is really just getting to know them and letting them get to know us. Again, building that level of trust
Yeah.
and comfort to kind of put their guard down. I can picture them on the phone, arms folded. They're not. Yeah, exactly. They're not. They don't want to open up to you.
Right.
So we give them a little bit of our background.
Right.
We tell them who we are. What we did before we even got into this industry. And then we open it up to tell them what we're going to educate them about.
Yeah.
We use the word educate a lot in our conversations.
For sure.
We don't use the word sell.
Yeah.
We don't use the word, any other word. We use educate.
So if I'm like a federal employee, I book an appointment with you. Let's say I'm 52 years old. I'm younger age client. You know my income, maybe you don't know my income just yet, right? Like, so on the sheet, it doesn't say income yet, but it does say how many years I've worked for the government, when I started, my year of birth, says what my rough balance is of my TSP, rough balance of outside assets. Like, you've got the general information there. First conversation, how do you open it? Let's kind of run through that. And then where does that first appointment end, right? So if you were to, again, in that situation, how would you kind of start that off?
So, we ask them, how long have you been with the federal government?
Yeah.
And identify that.
I've been there 5 years.
Yep. Great. So you're probably aware that you guys have some pretty robust benefits.
Sure. Yeah.
But we want to make sure that you understand them, because we've had conversations with folks that they don't really understand what FERS, FEGLI, all of those mean.
Yeah, I got no idea. That's why I booked it. I wanted to know more. Right.
Yeah, great. So, we'll talk about gathering 7 to 8 points of information.
Beautiful.
And let them know that we're not here to sell them.
Sure.
And really then it just kind of opens it up to them for what kind of questions they had. Why did you schedule this appointment?
Yeah.
And, ask them questions. God gave you 2 ears and 1 mouth. He's trying to tell you something.
So they start to open their mouth. I love that. I mean, that's really what you need early on, is to just figure out why the heck they booked the appointment, right?
Yeah.
And it's a unique experience, because most of the time it's like you're either cold calling these people, or, at least in other lead experiences I've had, it's been, I don't really know why I filled that out or whatever. This person booked an appointment with you at a certain point and filled out a whole form with all kinds of great detail on it. If you don't ask them why they came, you're really just, I've seen that mistake too many times. It's like you're just skipping past the real pain. Like, they could be saying exactly what you think, or they could be talking to a pain that you didn't know about, right?
Sure.
Like, okay, well, we were talking about this before. How many people have you come across to this point that think TSP is their pension?
Right.
It's like they're talking about, TSP, like, I know I'm going to get this much amount from my pension, but I really want to know about this first thing that I'm talking about. Like, okay, well, what do you mean there? You just said you know how much you're going to get?
Right.
No, well, I got my statement in the mail at the end of the year. It's like, hold on here. That's your TSP likely. The FERS is a totally different thing, right?
Yep.
It's like, so if you don't ask those questions at the beginning, you have no idea what brought them there. That's the first part of the discussion, at least for us internally. It's like, I want to know who you are. I say, hey, I'm Alex here, a federal retirement consultant. What can I do for you? What's going on?
Yeah.
Right.
Yep.
And it starts there. No sales pitch, no background on who I am, no explanation of my degrees or my acronyms or whatever. It's just, hey, you booked the appointment. What's going on, man?
Right.
And they say, well, I just didn't know really. I'm going to retire in a few years. Or it starts pouring out right there.
Sure.
You seen that?
Yep. One of the things that some people will have very specific questions. They might have a question about TSP.
Right.
Or they might have a question about their pension. But even, let's say, somebody that just has a question about TSP.
Okay.
All right. we're still going to come full circle and come back to them and educate them about, do you understand what FERS is?
Yeah.
Do you understand FEGLI?
Yeah.
But we'll address their initial question first.
I could not agree with you more.
But no matter what, in my opinion, if we're not a consultant on everything federal and we focus on just the one thing we're losing them.
Yeah.
Because if we answer their question, then they're like, okay, thank you. And they're off. But if we start addressing things that they think they might have an understanding of, if we can give them a better understanding or give them some confirmation on FERS or on FEGLI, now we are doing a consultant role.
Yeah.
And the buy-in from them is going to be, well, man, this person's not really trying to sell me anything.
Yeah.
He's not just answering my one question.
Right.
He's coming exactly. He's coming full circle, and he's talking about all those other things. I had a client a couple days ago didn't even know that there was this FERS special supplement because he was retiring prior to 62.
Okay.
Educated him. He was very grateful.
No sale there.
None.
No sale for you there.
No.
Right.
None.
I preach about that a lot on this show, but in pretty much any interaction with advisors and consultations and such is just, it's like if you can find an area where you can teach somebody something and there's no sale to be had there, like you don't have a dog in the race and you're helping them better either save money or find a reason not to cancel this or keep this benefit there or, talk them out of making a critical mistake that doesn't serve you in any way.
Right.
It's the best thing you can do for your whole sales process. It's like, I almost search for that in the first appointment.
Absolutely.
Right.
Yep.
And say what you're talking about there is a home run.
Yeah.
And I've seen so many times TSP, people have conversations about TSP. Oh, I want to know if I'm invested right in my TSP. I want to know if I'm allocated right. I moved all my money to the G fund. And I'll be like, okay, well, honestly, all that really depends on a bigger picture, right?
Sure.
Like, is G fund right for some? Yeah. It might be right for a lot of people. It just depends on what you plan to do with your other benefits, right?
Sure.
What are you going to do with Social Security? What's your plan to do with your pension? What are you going to take from, how much life insurance do you have?
Right.
All of those things are factors on how aggressive you need to be with this TSP account over here.
Of course.
Like, oh, okay.
Yeah.
Like, I'm not going to just tell you to be in the C fund for no reason, right? It should be all about this other stuff.
Yeah.
So it's never this one shot answer. Oh, what should I do with my pension? I just want to know if I should take the max or the unreduced or should I take a spousal option? Well, that depends on what you're going to do with the life insurance and what you're going to do with your TSP and how you, see, there's no one thing on any of their benefits, any particular question that doesn't unearth us to educate on everything.
Absolutely.
Right.
Absolutely. They ask a question about, to your point, should I be in the C or the S or the, it depends.
Right.
My answer initially is going to be, it depends, because there's a lot more that then we need to find out.
Right.
And, one thing that we found is if we're not doing proper fact finding, we're going to give up a sale.
Oh,
quite honestly, you're going to give up a sale.
For sure. I found it all to be right there in that first conversation, right? Like you have that initial conversation about pension and that leads to talking about the life insurance and talking about life insurance unearths pretty much everything, which is why I wanted to have you in, why I want you to train some of our advisors on this stuff is because that life insurance portion of it, it opens up the entire conversation. What's life insurance for? Primarily protecting our family, our beneficiaries for if we pass away too soon.
Sure.
Right. So if you had life insurance or you have a family or you have, some beneficiary, what are you going to do to protect them if you don't need this life insurance anymore? Or did you get enough life insurance? You were talking about that today.
Yeah.
I love this life process that you have, and the acronym just fits. That's just an added benefit to that whole thing. But the life insurance unearths all the fact finding in the world.
It does.
It's like if you're talking about getting rid of this life insurance policy, which seems to be some of the case when I'm talking to folks, why? Why are you getting rid of the life insurance? I'm not going to concur with you or agree with you on that scenario unless you can prove to me without a shadow of a doubt that you've supplemented this life insurance somewhere else.
Yeah.
Because if is it no longer a need for you to provide for your spouse or loved ones?
Right.
Well, yeah. Okay. But so again, we obviously both agree that the life insurance conversation is one of the most important things to have.
Absolutely.
What is your approach? Let's talk about your life approach to life insurance. Break it down for us, how you talk with the clients about their life insurance.
Yeah, one of the big things I ask, I always assume that people have other life insurance. You
Well, that's good. I don't
ask,
normally
do
that.
you have life insurance?
Right.
How much do you have? Let them tell you, you know what, I have none, or I have just what Fegley provides, basic.
Yeah.
I always assume they have something because that's just the way that I was brought up in the industry, that I always assume that they have it.
I love that.
And we have a lot, I hear a lot of people sometimes when one of my new agents is asking the question, how much do you have? Mm-hmm. It's a good thing to say that way instead of do you have it?
Yeah. No, I love that. I mean, maybe saying it without saying it is kind of what we've been doing here, but that is a important distinction of like what you say rather than, or how you say it rather than what you say, right?
Sure. And then your next question is, well, how did you come up with that amount? Uh-huh. And
Okay.
you know, well, I mean, and I'll kind of coach them along, and I'll say, you know, did your agent that sold it to you, did they just say that, you know, 250,000 sounds like a great amount because it's a lot of money?
Yeah. Typically.
And, you know, a lot of people don't know how they come up with that number. Sometimes it's, well, the premium was right.
I'd argue most of the advisors watching this don't know that.
You're probably right, Alex.
Yeah.
And if they say, well, 250, it just sounds right. And then I'm going to say, well, but is that enough for your family if you don't make it home tomorrow night?
Mm-hmm.
Well, how do I know that? If I'm the advisor and I didn't ask other questions to find out what the real need is, how can I say that's a good number? Is it because we're advisors and we're afraid to ask somebody to pay $200 or $300 a month for a life insurance policy that's going to protect their family?
Yeah.
Or is it, you know what? I know that a $250,000 20-year term is going to cost $72 a month, and that's a little bit easier on somebody's budget. But if we haven't done the fact finding to find out what's important to them and what's going to protect their family in the event that they don't make it home,
Yeah.
then actually I'm doing them a disservice.
Yeah.
Because what you don't want to happen as an advisor is you sell somebody a $72 a month, $250,000 20-year term policy, hadn't done all the rest of the fact finding. Tragedy happened. The widow or widower comes to you and says, why'd you sell only a $250,000 life policy? We've got $1 million in assets.
Yeah.
Now what are you doing?
Cars, homes.
We got all this other stuff to protect.
Yeah.
Oh, you know what? I was making $150,000 a year. I didn't protect it.
All too often, that's the tale I see in the federal space. They have 1 times their annual salary. They've heard Fegley's not a good deal, but they have some life insurance, so they just ignore life insurance altogether. I've got a small policy with the government.
Yeah.
It's 1 times my annual salary. My conversation is like, well, look, you know what? You understand, like, if you pass away, you've got what's in that TSP, which is, you know, in some cases with the younger people, 40, 50,000.
Sure.
And then 1 times your annual salary. So you've given your spouse 1 year to get back up on her feet after expenses like burial expenses and everything are all covered and everything like that. She probably has less than 1 year's annual salary to get back and replace your income. You know what that means? No, I don't know. I mean, I guess that's not great. It's like, well, yeah, but that means she's moving. That means the kids are out of school. They're moving to another school. That means they're downsizing homes. That means she's finding something else. You know, they're moving in with their in-laws or your parents or her parents, whatever. Something terrible is happening because we didn't want to pay a few extra dollars a month.
Yeah.
Right.
Yeah.
So
you know, I
how
go
do you
through
explore that number then?
Absolutely.
Okay.
So I go through and I use, you know, we're in the life insurance business, everyone. So why not use the acronym LIFE, LIFE?
Yeah.
All right. And you know, so L, loans.
Yeah.
I ask them, hey, you know, what in the event you don't make it home tomorrow night, what do you want to make sure is taken care of?
Right.
What do you have from a mortgage standpoint? What do you have on student loans, credit card debt, car loans, anything big?
Yeah.
That in the event you don't make it home, what do you want to make sure is taken care of?
Sure.
And in this process, we might identify the need is larger than what we can afford. But no matter what, these aren't your numbers as an advisor. These are their numbers.
Sure.
You're simply writing
Using
it down.
their numbers.
Using their numbers. Because again, going back to earlier conversation, how'd you come about getting $250,000? Well, the advisor said it was a good number. I don't want it to ever be my number because I don't want to ever have that person come back to me, their family, their beneficiaries, and say, wasn't enough.
Yeah.
All right. So then you've got the I, income replacement.
Okay.
All right. So you're a federal employee, you're making $50,000, $60,000, $70,000 a year. Your family's used to getting $50,000 to $60,000, $70,000 a year. How many years do you want to have your income replaced? I'm going to tell you it's 3 to 5 years because, again, you made the point. Do they have to go back to work? Do they have to find a second job? Are they pulling kids out of private school to put them in public school?
Yeah.
Do they need to hire a nanny to help take the kids and get them to soccer practice and get them to school and all that kind of stuff?
Mm-hmm.
There's a cost with that.
Yeah.
So do we want to replace our income for 1 year or 3 to 5 years?
Right.
All right.
And you found it to be typically 3 to 5.
3 to 5 years.
Okay.
Yeah.
Makes sense.
And again, I'm asking them. So you make $70,000 a year. Do you want that income replaced for 3 to 5 years? Do you want it for 5?
Okay.
Because let's then put a hard number with that. 3 years, great, 210,000. 5 years, 350,000.
Mm-hmm.
Put the hard number down. All right. F, final expenses. To final expenses, some people it just means a burial or cremation or whatever they're doing, donating it to science, whatever it might be. But then some people want to throw a big party and celebrate life, and they want to have, or it could be near the end of life, they have medical bills that they want to make sure are taken care of. They're in the nursing home. They've had in-home care. They've got nurses to pay. Final expense.
Okay.
Okay. And then E, big one, education.
This is the one I loved the most. I mean, I love the whole process because, it's just, I've never had a good methodical way to finding the number, which I love this process for, but this E really hit it home with me.
Yeah.
And we'll talk about that in a second, but go ahead.
Yeah. Education.
Right.
So, and oftentimes we find in the federal space, most people have adult children, but let's take it a step further. Hey, Mr. Smith, do you want to leave some money or say that you helped pay for maybe your grandchildren or great-grandchildren's education down the road?
Right.
All right. I'm not saying you have to pay for their 4-year degree, but if a portion of your life insurance proceeds are designated
earmarked
to give $25,000 per grandchild, or whatever that number might be. Again, going back to it's their number. All right. So now we've finished up LIFE. We add all those numbers together. All right. And then going back to the original conversation, how much life insurance do you have? And they say, well, I have 200,000.
Yeah.
Well, we just identified that your need is 600. Let's just use that number, 600,000.
3 times.
You have a deficit of $350,000 to $400,000.
Right.
How are we going to solve that now?
Right.
To get you more life insurance?
Yeah.
And so that's really our process, just in a nutshell, to make it at a high level. But there's more to that.
Sure.
When you start drilling down. But just again, you're fact finding, and in that conversation, think about it: income replacement. How much do you make? There's a key indicator of what we need to know what they make.
Yep.
So we've already
one of the key questions that we preach about for sure.
Yeah.
Is income. And it's not listed on the appointment request form either, right? So it's like you've got to figure out that number, and then on top of that, like you're figuring out family dynamics. You're figuring out, and typically I found like when I start talking about life insurance death benefit, if they don't need it or they really don't want it, it comes out right then. It's like, no, I don't need it. Honestly, I've got plenty of money stuffed away.
Sure.
Okay. Talk to me about that.
Yep.
Right. And it opens right back up to the other conversation of what most advisors that join the program are looking for is like to manage assets or to roll money over or something like that.
Yeah.
And it comes up right then. Or it's like, I don't know, I've got this policy or I've got some outside insurance too. It's like, oh, okay, well, you've got an outside policy. What's that? I mean, how much do you have? Oh, I have another 200,000 outside.
Yeah.
Well, talk to me about that. What was that geared for? Oh, it's a term policy. It lapses. It's like a 20-year term or a 30-year term, something that was sold to them.
Yep.
It's like, so, okay, well, what do we, why do we have that? Or, what did they sit down with you? Same kind of conversation. Sure. I've never had a good methodical reason. I was always just taught like in old Hegna days. Hegna's like, well, you need, he would say that you need a 500,000 for every 50,000 that you make, right? Or $1 million for every 50,000 you make is what he's saying. It's like, that's a lot for somebody that makes 100,000. Maybe they don't need that. Right. I don't think that at a certain point you make so much income that you're stuffing away and that fights against your life insurance needs, right?
Right. Yep.
Stuff away a lot in savings. So it's somewhere, in between. Finding that sweet spot's tough. I've always tried, once I figure out that they need life insurance, or we start to have that conversation, like, oh, you're underinsured. You don't have assets to take care of yourself or consider yourself self-insured.
Sure.
You still have a family to take care of. We need to up your life insurance needs. I'll use Fegley as the benchmark of the sale, right? It's like, you've got this life insurance right here, right? Like, and again, it's like, it's almost a sale that I don't need, right? Like, or it's a sale that I don't get paid from, right?
Right.
So selling them into Fegly gets them to feel like, oh, okay, yeah, no, you're right. I do need more life insurance. You're right. Using that as the benchmark, it's like, well, you could buy more life insurance. Why don't you have more life insurance here? Your Fegly saying you have 1 times your annual salary, but you have the ability to go up to 5 times your annual salary.
Right.
What's that number? Well, how much do you need? And they're like, I do need more life insurance. It's like, well, why not explore the options there?
Sure.
And then once they're bought in on the life insurance, just in general, I'll flip them and be like, well, look, there's downsides to Fegly, though. It's like, okay, well, if we want life insurance, we want to find the best bang for our buck. And while Fegly's great and it's available and it's easy, it's also maybe the least useful life insurance out there right now.
Yeah.
There's all kinds of better supplemental options to what you're planning on using here. And start looking at other options. But I've never had a good methodical approach to figuring out what the number is. And like I said to you, that E stands out big time to me. The number one thing that my parents or my kids' grandparents wanted to do for us when we had our first child and now our second child was provide for their education. It was like they were fighting for it. I was saying this before I came in. They were fighting for stuffing away money and, into some sort of college plan account or tax-free account or something like that.
Sure.
And, it's like they're the ideal demographic. They're what you're talking about. They're like 4 or 5 years from retirement. They would have loved to have found out that they could, just leverage their life insurance policy to provide that, for either that set of kids or the next grandkids,
generation,
the next generation, which is more likely maybe the case. They might actually make it to where my kids are in college. But to set up something and earmark it, and like you were saying before we came on, you could set the death benefit to go through a trust.
Absolutely.
And have the trust rules be to pay for education for anybody bearing this last name or whatever it is, right?
Yeah.
I mean, that's the incredibly impressive part of it. And it's something that I'm definitely going to take into account as I'm approaching folks is let's talk about your life insurance needs.
Yeah.
Or like how much income do you need to provide? In fact, it's probably even a good case to understand those aspects of somebody when it comes to when they want to consider themselves self-insured. Do you have enough assets to just cover this, let alone live on this in retirement? Are you? I mean, that's probably the number one benefit of learning your process here is just identify that number. So when you're talking to folks, what kind of products are you looking at when you do find there's a need? Let's say you've talked to them, they're significantly underinsured, they don't have other assets to place over there. What kind of products are you looking at? Is it term? Is it more permanent forms of life insurance?
Yep.
We talked a little bit about whole life. Just educate us a little bit there on what your options are or why you're looking in one direction.
Yeah, great question. I don't jump into specific named products yet. I go back again, education. Mm-hmm. I talk to them about, do you understand there are 2 types of life insurance, right? And normally they belt out, there's term and there's whole life. Mm-hmm. Well, I correct them and I say term is one type, yes. However, permanent is your other type. And there are multiple types of permanent. There's whole life, there's universal life, there's variable products, there's IULs. There's a lot of different products on the permanent side. Yeah. All right. So I go through an education about that and I say, here's term, 10, 15, 20, 25, 30. Yes. What would you say? And again, I ask questions. What would you say is the cheaper type of insurance? And most people term. It's cheaper. Yeah. Well, it's cheaper on a monthly basis, but let me show you how most likely it's not the cheapest. Mm-hmm. And I relate that to Fegly also. Okay. Because again, Fegly not having any type of cash value to it. It's just a group term policy is all it is, right? No living benefits or anything like that. Yep. Right? Yep. And I go down the permanent side. Talk about whole life and the guarantees that whole life has. Right. Guaranteed premium, guaranteed death benefit, guaranteed cash value. Okay. Yeah. Then we talk about IULs, ULs. They're permanent products. They don't have all those guarantees, especially nowadays, right? Necessarily in the interest rate environment, we might start seeing some of those policies adjusting. And I just talk to them and say, hey, if you're 55 years old, let's say we're talking to a 55-year-old federal employee, they're getting close to MRA. They might be walking out the door, maybe running out the door. We're not sure. And average life expectancies, low 80s for a male, upper 80s for a female. Yep. You buy a 20-year policy. If you celebrate that 76th birthday, you just rented an insurance policy. It has no cash value. It has no value to you. The only value is if you don't make it home tomorrow night. All right. And I paint that picture. Yeah, it's kind of a gory picture. We don't like to talk about death a lot, but it's a reality.
Sure.
All right. There's two sayings, not death and taxes. Number one,
I feel like I find myself talking about death almost exclusively in my conversations.
we do in our industry. We talk about it a lot.
It's not, I feel like you got to be pretty abreast to having that conversation. I am, at least.
Absolutely. Number one, we're going to die. Number two, we can't change number one. So let's make sure we protect it properly.
Sure.
Right. And then I'll get to the permanent side and the whole life.
Yeah.
I'll say now, whole life, again, guaranteed premiums, they never go up.
Mm-hmm.
Relate that to FEGLI. FEGLI does go up.
Yeah.
Right. Every 5 year.
Right.
But do you want to have something of value instead of renting a policy?
Right.
Relate it to, do you want to rent your house or do you want to own your house? So just kind of talking about, again, education and painting that picture for them really helps them understand it.
So if you're an advisor watching the show right now, how do you, so the whole life product guarantees the death benefit, obviously.
Yep.
Guarantees your premium to stay consistent. Basic guarantees cash value.
Yeah.
How does it guarantee cash value?
So based upon, depending on the type of policy and how it's structured, it's going to have some type of guarantee, whether that's through dividends or anything like that. If you're dealing with mutual companies that pay dividends, they're going to pay paid up additions. They're going to have some cash value to them.
So the dividend gets paid into a cash value account.
Yeah.
Okay.
Yep. And sometimes we're talking to people about using that as a supplement to their retirement. So they got TSP, they got their pension. But if that's not enough, what's another way to get you tax-free retirement money?
Right.
Through a whole life insurance chassis. There's a lot of different products out there that we can go into depth, but I don't think the show's long enough for us to do that.
Sure.
But definitely something to look into. And we use that as a vehicle.
So because of the cash value there, it's an opportunity for folks, or it provides some sort of value to the prospect. And so, you're paying more money now, but you're also, got this account that you can tap into.
Sure.
Versus obviously not with FEGLI.
Right.
Or any other real term policy out there.
Yep, absolutely.
And so let's say, okay, you start talking to them, you've got their need, right? You understand how much life insurance they need. You're talking about whole life product. There's still got to be a conversation at some point about like how much they can afford, right? Because not just going to be found money. Although I would argue that in some instances when people are really sold on a concept, they start to find money elsewhere, start to sacrifice other things.
Yep.
But let's say it's kind of like that middle ground. It's like, okay, you've got their need. In your illustration, it was like $350,000-$400,000 that they needed of life insurance or supplemental plan in addition to their FEGLI.
Sure.
Although it might have been even more than that, really, because if they're talking about permanent policies, they get to do a 75% reduction.
Absolutely.
Now they need even more life insurance, right? Unless they plan on keeping that FEGLI. Depends. If it's just the basic, maybe it doesn't get too expensive. But
if they have option B or something like that,
that's going to be seriously
it's going to get
expensive.
pricey.
Right.
Yeah.
So let's assume their expensive policy. Let's assume that it's just basic. Okay, let's keep it simple. They're going to keep basic. You got $400,000 in supplemental that you need to find. You go to the life insurance, or you go to the whole life world. The whole life policies that you're looking at are too expensive for them, or it's just flashing. So maybe give a healthy male 55-year-old. Do you have an idea of what the premium would be for $400,000?
$400,000 probably be $300 to $400 a month.
See, that's what they don't understand, right? It's $300, $400 a month. I'd argue there's plenty of federal employees overfunding their TSPs by more than that amount each month. And maybe that's not the best place for that money. I don't know. But okay, let's say that's too expensive for somebody. What do you do?
Well, there's
What's the first step, I guess? Would you back down the death benefit more and kind of find less supplemental? Or
Well, I'd look at a couple things. I'd ask them that first question. What is your budget that you're working with?
Okay, so after you figure out, it's like you talk theory.
Sure.
This is second appointment, right?
Yep, second appointment.
So second appointment. You're talking the theory and concept of life insurance, permanent versus term. Now then you start to talk about what their budget is.
Yeah. Okay. And I never, if you caught one thing, I never ask them about their budget in that first conversation.
Not at all, right.
I find the need. I'm going to go to them on that second appointment and I'm going to give them what their need is. Regardless of price.
Yeah.
And what I have found in the past is a lot of advisors, they don't want to give them that big number. Whatever that monthly cost is going to be, they don't want to give it to them because they're like, that'll shy them away.
Yeah.
I can't, I know they can't afford that. They only make $70,000 a year.
Right.
I know they can't afford it.
Right.
But instead, show them what the need is. It's that pain point.
Sure.
And you reiterate, hey, if you don't make it home, tomorrow night, you don't have this. What are you going to do? So, I mean, it could go a couple different ways. We could start talking about their budget. Let me help you with your budget. Where can we cut expenses to afford what you need?
Right.
Or
what are you prioritizing over this?
Right. Exactly.
Right?
Exactly.
What could you possibly, at $70K?
It's your family.
Your family, right? So, okay, roof over your head, food on the table.
Sure.
After those things,
Right.
this should be, fourth or fifth in line of your priorities.
Right.
So what's...
You want to pay the cable bill, or you want to take care of your family?
Right.
Little things like that.
Outlandish,
Sure.
Yeah. Okay.
Now, to go back to your other question, if I see that and we need to back down somewhere. We need to relieve the budget a little bit. Talking about term that has conversion privileges is the other road that we'll take.
Sure.
We'll talk about getting a nice hefty term policy.
Yeah.
That, hey, by the way, and this is again setting that relationship. By the way, we're not going to be your consultant that once you meet with us after this is over, if I sell you something that you need, that you're never going to see us again. We talk about setting up every year, we do an annual review. If you want a semi-annual review, say it and it's done. We're going to talk to you twice a year at least.
I love that.
But that's going to give us another opportunity if we sell them a term policy to convert. Conversion. If you sell them a $500,000 term policy, we can convert $50,000 a year because it's permanent insurance that you'll need to the day you pass, and it might be on those 20 years. Let's convert 50 a year.
Not to mention giving you countless swings at bat when you do those things to either get more referrals or to build your network in the federal space or to obviously roll over other assets that might come down the pike.
Correct.
But these generally are younger age clients, although I've certainly been known to approach older folks as well.
Absolutely. Absolutely.
But it's just, I think a lot of folks out there like, oh, I don't want to be a life insurance salesman. But if like the only tool you have is I'm going to talk to you about your TSP rollover, then you're just a TSP salesman. Like you're just trying to sell them out of their TSP. And that's, I'd argue that's the number one thing federal employees are warned against. It's about sitting down with somebody that's going to roll their TSP out, and don't do it. Somebody that does that doesn't have your best interest in mind.
No.
Right?
No.
So if like you just play into the prophecy, right?
Yep.
Like you're just playing in right to, oh, you are what I thought you were.
Yeah.
You were just going to talk to me about my TSP. Even when their question is about TSP, I'll argue. Like you came to me with that question about TSP, and I'm giving you advice there. It's like, well, I've been told to stay away from guys like you that are just trying to roll my TSP. I was just asking for advice on should I be in the C fund or the G fund. Right. But then you open it up to this life insurance thing. It's like, well, nobody warned me about the guy that's going to come and try and sell me more life insurance, right?
Right.
Like nobody told me that somebody was going to sit me down and show me my own ignorance to my own needs or debts and covering these needs for my family, right?
Sure.
And I feel like it also has this sticking point of like everybody in the back of their mind. It's like estate planning. When people have a certain amount of assets, they know they need to get an estate plan done.
Yeah.
When certain people make a certain amount of money, even like $50,000 or more, they know they need life insurance. Especially for me, it was like the second my firstborn came out.
Sure.
Like, ooh, I got to get life insurance, right? I didn't even think about it once with my wife. Sorry, babe, but I should have. And then I got it. And then I got this life insurance policy. The second, and I got as beefy as I possibly could.
Sure.
But some people don't really realize that. If I had company life insurance, which we don't have here, maybe I should talk to Lee about that. But if I had a group plan at my company, I probably would have been more ignorant to how much life insurance I need. And I've seen that a lot is people feel like because it was what was given to them, that's all the life insurance they need, but they've never really been educated on how much life insurance somebody potentially needs.
Yeah.
And that's what you're doing in that fact-finding mission there, is finding that all out. And it just builds a whole lot of credibility because you're also explaining their life insurance to them. You're explaining other benefits to them.
Yeah.
And, I think it's just a necessary conversation if you're truly going to call yourself a retirement planner. You're not a life insurance salesman because you're selling life insurance. It's like that was the need of the day.
Sure.
And then I'm still going to be here every month or every year for you from now until you pull the trigger on retirement. And then we can talk about your TSP. We can talk about your Social Security. We can talk about which option for your pension and everything like that.
Yep.
I mean, that's been a huge point to every advisor in the program is like, you can't just be this here today, gone tomorrow advisor that you may be used to being. You have to be something different if you're going to succeed in the federal space.
Yeah. If you're a holistic consultant and building their trust, they're going to come back to you. They're going to give you a lot of referrals, right?
It's like, how could you call yourself that though if you don't talk about life insurance?
I mean, we should just be called annuity consultants if that's all we're going to go after.
Right.
Or TSP consultants.
Yeah, I deal with your deferred assets.
Right.
I'm a deferred asset consultant, right?
Right.
That's all I deal with.
Yeah.
But that's not true. Like everyone watching this show would be willing to work with non-qualified assets.
Absolutely.
If I said, hey, you know, this guy has $400,000 sitting in a non-qualified account and he doesn't know what to do with it, I'd say every one of those folks watching this show right now would be like, oh yeah, I help that guy.
Right.
Regardless of their age.
Yeah.
But life insurance is an easy way. I mean, what are you going to make on a whole life policy at just street level contract on a life insurance policy, whole life policy, like the one we're talking about, 400,000.
Yep.
You said it would be, you know, somewhere 300, 400,000. How does that pay out? Educate the fleet.
Yeah. I mean, you know, average, it's going to hit you with about a 55% commission.
55%.
You know, so I mean, okay, yeah, it's not as good as a big layup on a annuity.
Right.
But you know what? It will help you with annuity sales in the later times.
Sure.
When they're retiring. So if you got a $5,000 or $6,000 annualized premium, I mean, you're making $3,500. $4,000.
How many hours are expended in that?
2
hours.
Maybe. It's a good hourly rate. I mean, I know some attorneys.
insane.
Yeah, it's crazy.
Come on. It's
crazy.
like, you have to have the conversation anyway.
Yeah.
You're talking about second appointment, like where they're, I mean, so first appointment probably takes 15, 20 minutes. And then second appointment, you've got an hour invested explaining their benefits and talking to them about their needs and then talking about the life insurance concept, aside from having to do the paperwork.
Right.
Right. And get the med done and that sort of thing. As long as you're dealing, and that's really has to come down with what carrier you're dealing with.
Absolutely.
If you deal with a crap carrier, you're going to have crap background issues as far as like what I mean by background issues. I mean, like, they're not good at telling you what forms they needed corrected, or they didn't get the paramed ordered fast enough, or they just, you know, didn't do 6 things that they were supposed to do well. And now it comes back on you to chase that tail around forever.
Right. And now times it's, you know, back in the day when I started in the business, it was doing everything by hand on paper.
Yeah. Right.
Now everything's automated. You know, e-apps, e-signature.
Oh my gosh.
You know, I mean, they've made our job really easy.
It's simple.
And, you know, I wanted to point something else out, and I know you and I talked about this, is, you know, if you're talking about the first pension, you started to mention, go down the road of the survivor benefit.
Yeah.
We got some pension maximization options there with being able to get life insurance for our spouse and making sure that we're not reducing our pension. You know, some of these guys, we have these pensions where they're $800-900 after they take the survivor benefit, and then they got taxes, and then they got everything else.
Yeah.
Well, if we do a good job of consulting with them and saying, hey, we can take a little bit of that money and buy some life insurance, and we can go down that path. That's for another episode, another conversation.
That's the conversation. I mean, if any of the people watching this have watched our sales training videos, that's like the number one thing that we talk about. It's like that conversation, not because you're trying to do a pension max scenario, but just having the conversation of unreduced. And I know this is the number one objection I get to that part of the sales process. Well, what if they need to keep the spouse on the health insurance? You know how many times I could count probably on 2 hands how many people I've sat down with that needed to take a partial survivor to keep the spouse on the health insurance.
Yep.
Because it's not that they can't keep the spouse on the health insurance in retirement while the federal employee is living.
Right.
It's after the federal employee dies.
Absolutely. Yep.
It's like, so how much are they banking on needing life insurance or health insurance thereafter?
Sure.
And my argument would be like, look, the money you saved during that 10, 20 years that you lived in retirement could easily have been saved or tucked away to pay for a supplemental life or a health insurance policy, supplement to Medicare policy. Yep. So Medicare policy, right?
Yep.
I could easily have found a policy for him or her, the non-federal spouse, by that point in their life.
Right.
And so it's like, I'll have the conversation with them. It's like, well, in order, you know, as a federal employee, you know, to keep your spouse on the benefit, you've got to take one of the survivorship options.
Yep.
Only if you need that spouse to be on the policy after your death. Right. And they're like, oh, no, I don't need that. It's like, well, then you should definitely take the unreduced amount.
Sure.
Right? Take the unreduced amount.
Right.
But now that leaves the question, how are we going to take care of our loved one?
Yeah.
Let's talk about your life insurance. I'm going to get rid of my life insurance. Okay. Well, if you're going to get rid of that life insurance, then you better be doing something special with these other accounts. Like how much? Because I only saw $500,000 in your TSP, and you make $60,000 a year. So tell me, like, what are you planning to do?
Does your spouse know that you're going to stop that policy, or what? You know?
Well, I've got other assets that I haven't talked about. Oh,
Perfect.
okay. What
Tell
other
me about
assets
those.
are you talking about? right? And then they start talking about those other things. Yeah. It's an easy benchmark there. But most of the time, at least with the younger folks, it's like, well, I don't know. I guess I'm gonna. Well, I don't know what I'm gonna do. It's like, well, you have 1 times your annual salary. What other life insurance do you have? Right. Or
absolutely
how much much life insurance do you have outside? Well, I don't have any.
Oh, then we need to have a conversation.
Okay, well, let's talk about that because that's where your issues are.
Yeah. And when you start your conversation like that and you're asking a lot of those questions, and then you find another need, they know you're not there to just sell them something.
No.
They feel that comfort level.
I'm trying to help you make good decisions with these benefits, right?
Right.
I don't care about whether you buy something or sell something. It's like, look, and then at the end, my whole thing has been, okay, I hear a lot of I don't knows. Take the hat off kind of thing. I keep saying, it's like, let me just level with you real quick. Yeah. I hear a lot of I don't knows. Are you not talking with anybody about this sort of stuff? Like, no, you need to be.
Yeah. Yep.
And I'll almost do the push ways, like whether it's me or somebody, you need to sit down and talk with somebody about this because you've got an issue here. Don't you see that?
Yeah.
And they're like, yeah, I see that.
Yeah.
Like, look, I'm happy to help you run some illustrations and stuff like that. All you got to do is ask. But you see that this is something you must act on. And the sooner the better because you're only getting less healthy every day. Right. I don't care how much you work
Future insurability.
Whatever, right? Like as far as you on paper, actuaries think you're getting less healthy every day.
Right.
Right? Like, oh, okay. Well, yeah, I mean, I guess if you can run some stuff, that'd be really great. It's like, okay,
great.
I'd be happy to do that, right? And then you move forward.
That's right.
With your fact-finding questions, right?
Absolutely. And I think oftentimes some advisors out there, again, they're looking for that big whale, that big elephant they want to hook on the annuity side.
Yeah.
And they're stepping over opportunities in front of them to find to solidify the relationship.
Exactly, though. Like that's the little thing, though. It's like you skip over these things, you've only got a bigger, steeper mountain to climb to close that TSP.
Right.
When I close these smaller deals on the way to talking about TSP, that hill, the incline, the grade of that incline becomes so much less. It's like because they already trust me here. When I give them advice there, they're like, well, it's always in the best interest of me because this guy's helped me with this thing and they've helped me with this thing. And he didn't even get paid on this thing. He helped me fill out my blue book over here. He didn't get paid on that thing. And then he helped me do this thing and he reduced my FEGLI costs and found me a supplemental policy. And he got paid on that, but it's been good everywhere else.
Yeah.
And now he's telling me not to be in the G fund, but still I need that kind of safety. Maybe I should entertain what he's talking about over there.
Yeah, absolutely.
Right.
Building those layers of trust.
It's huge, man.
Yeah.
It's huge.
Yeah.
So you've had a tremendous amount of success. What do you think advisors need to know most about life insurance? I mean, maybe we've already covered it all. I don't know. But you tell me, what do you think they're missing the most about life insurance?
Asking the right questions.
Yeah.
Asking questions that you don't know the answers to necessarily, and putting the onus on the client to really open up to you.
It's like you got to be interested.
You do.
Right.
You have to have a general interest in their future. I mean, I use it I kind of paint that gory picture. I ask, what if you don't make it home tomorrow night?
Yeah.
And just don't say another word.
Yeah.
Wait for them to respond because they're going to start squirming in the chair a little bit. They're gonna be like, well, what do you mean?
Yeah.
I mean, if you don't make it home tomorrow night, what is your plan?
Not a scare tactic. Not
a scare tactic. I just
looking at paper.
I want to know.
Right.
I want to know so that if you do build a relationship with us, whether that's with life or TSP or Medicare, whatever it might be.
Or just as a federal employee.
I just want to make sure you understand what your options are so that I can come back and say, hey, here's what we talked about.
Right.
I mean, put yourself in their shoes.
What makes a client too? That's another thing. It's like I've treated a lot of folks that maybe aren't have money with us or have done a life insurance policy with us, but they're just here as getting consulting advice from us.
Yeah.
I'll treat them just like their clients.
Absolutely.
As a federal employee and somebody that's getting consultation advice from us, I just want to know, as a client of ours, what is your plan if something doesn't happen here? Because I'd love to lend you some advice there, right? And so it's like, I'll treat you as a client, even if you got no money with me, right?
Yeah.
Because I know, whatever, I'll get some referrals out of you or something like that. But I've got your name, I'm going to drip on you regardless. So
yeah,
you might as well just treat them like a client from the get-go.
Yeah. And as an advisor, for those of you that are new in the industry, maybe or haven't gone down the life insurance path, let me tell you one thing. My second year in this business, the most gratifying thing to be able to do is to hand a death benefit check to
A widow.
a widow.
Jeez, yeah.
And you want to talk about really just making you understand as a professional
Yeah.
that what you do for a living every day and that you were able to help that family because you saw their need and you helped them with getting them a new policy over and above what they had maybe at the federal government that was not enough.
Yep.
To be able to hand a check with a couple commas in it, it's the most gratifying thing in this industry, and it's why I stayed in this industry after 2 years.
It's usually like, I mean, not only that, the spouse comes back. They're looking for ways to distribute that death benefit inheritance, whatever you want to call it, the best or most efficient way possible. What do I do with this 7-figure check? Like, I don't know. Do I just put it in my checking account? It's like, no, sweetheart, you don't put it in your checking account. You want to do X, Y, or Z. I'll tell you that my mom's parents passed away when she was very young, and they were young. They were like early 40s. And she says to this day, and a lot of the reason why I got into this business, she says that life insurance check was the biggest saving grace for the entire family. Family of 4, both parents died within 2 years, and there was this nice 7-figure check.
Yep.
He actually worked for Allstate, so he had a nice beefy policy.
Sure. And
it paid out, and she said it was the best thing ever. You know, best thing for the family, took care of everybody.
Sure.
They were a little older age, kids, and as far as, you know, they were like 16, 17 years old and so on. But that took care of the family for long time. Every one of them. And she says it's like the best thing that, a lot of people look down on life insurance, but it is, you know, I think other industries or other portions of the life insurance industry have gotten that car salesman side to it. But death benefit, sheer death benefit play, cash value accumulation on top of that.
Yep.
Permanent life insurance policies, repurposed life insurance policies. Life insurance has come a long way over the last few decades, but it is one of the most beneficial things for young families when there is a death that occurs.
Yeah. Yeah.
And then,
you know, when you, one more thing, when you ask that question, you know, how much do you have? And they do come out with a number and they say, yeah, you know what? I have this policy that I bought. Next question should be, great, let's get a copy of that policy. Let me review it.
Yep.
Get an in-force illustration. Let me review it. Let's see if it's doing what it was supposed to do when you purchased it. Again, you're being that consultant.
Oh, for sure.
If they trust you, they're going to give it
back to the benefits.
Absolutely.
Right? It's like, well, that'll help us see if we need more FEGLI or we don't need this FEGLI policy anymore.
Sure.
We can get rid of it. It's like, don't allude to a further sale there.
No.
I love that.
You're their trusted advisor. That you're not selling them anything.
No,
you're a
federal retirement consultant. That's what I said. I have not become your financial planner or your retirement planner until you've hired me to do that. Right. Unless you so again, like when I tip that hat, it's like, if you need help, you let us know.
Right.
Like, oh yeah, I want some help. Well, now I'm a financial planner.
Yeah. Absolutely.
But before that, I'm just your benefits guy. So everything that you tell me about outside assets or outside life insurance policies or your TSP strategy all comes back to me bettering your picture and your other benefits, right? Absolutely. How to maximize the other benefits. That's really it.
And especially if you're dealing with, if you have a federal client that is younger, that isn't of MRA or isn't leaving the agency and you don't have an opportunity to roll over their TSP right now, why not make something for your time and then build that trust so that later
it's almost a definitive need too. It's like, it's almost guaranteed that they need this thing.
Absolutely.
Unless they don't have a family, unless they don't have a spouse, like, you know, and even still you could argue like, well, what are your intentions? You going to have a family one day? You going to have a spouse? It's like, well, maybe we should consider some life insurance, right?
Yep. Absolutely.
You can switch the beneficiary of the policy down the road, whatever.
Sure. And if I'm able to make a couple $1,000s, maybe it's not 15 or 20,000 like it would be on an annuity sale, but if I'm able to make a couple $1,000s for my time and I'm helping that person, why not?
It's not like you're not going to. I mean, you guys are writing how much? I mean, you just told me about a $900,000 a week you're about to have on the annuity side. Yeah. Well, that's 1 week. That's not even talking about all these are all those life insurance sales on the side. Like, that's just the annuity side. It's not like those don't come.
Right.
It's just a matter of like, okay, when I'm not executing there, it's like, I'd argue they're almost different clients. It's like the guy that has $900,000 for me to roll doesn't need the life insurance, but the guys over here that need this life insurance, I have to talk to those people anyway.
You have to. Right? And they might have $900,000 in 10 years when they're ready to retire.
Exactly. So it's like, am I setting myself up for utilizing these appointments as best as possible? And I'd argue the majority of the people working the program are learning that lesson the hard way right now, but are not doing it.
Yeah.
Right. They're not using these hours efficiently. So it's like, you already have to have that conversation.
You have to.
It's like, you're not maximizing it just because there's not a 15, 20 grand appointment. All you're doing is lessening the value of that dollar per hour, right?
Exactly.
By wasting all of these other hours.
Right.
Right.
Yeah.
So might as well maximize $1,000, $2,000, $3,000 commissions.
Exactly.
Here and there.
Yeah.
Spend every hour effectively.
That's right.
But Tim, that's a lot of information for maybe one episode of Coffee for Closers. But we will be doing all kinds of different other training videos, kind of breaking down this sales process, giving you a little more illustration, a little more maybe a deep dive into each aspect, how to do that fact finding, the presentation to a client, maybe even some role playing. We'll be doing that more and more with Tim over the next few weeks. So if you're tuning in, thank you so much for watching us. Tim, thank you so much for sharing with us.
Absolutely.
And everybody, we'll see you right here next time on Coffee for Closers. Take care.